The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. It's Jobs Friday, and boy, we got some jobs, man. 339,000 jobs added. You actually have the unemployment rate ticking up to 3.7%. The market, they like this number, man. Some may say it complicates things for the Federal Reserve. I don't think it does. I think they were as clear as they could be, man, regardless of these numbers, outside of some magnificent surprise, and this just doesn't quite meet that barrier. I don't think they would have been so strong with the language coming into this meeting, knowing that they had the jobs number. We got CPI coming up next week as well, I believe. They were front and forward that no matter what was happening with these numbers, it was time to give it a one-meeting rest and see if we get a little bit of a lag, a little bit of a catch-up. And boy, I don't know how it happens when the market's adding 340,000 jobs in a month, because as long as everybody has the money they have, as long as they have the jobs they have, you got wage growth up about 0.3% for the month. So trimming a bit. But boy, I don't know how you get generational inflation under control, folks, with these numbers. And we'll jump to the headline before we get to the charts. Why not? U.S. labor market shows resilience. Strong May hiring, 339,000. I think we got revisions, something like 95,000 to the upside as well. You take a look at the chart. You add on the fact that we actually have CPI ticking up recently. You add in the last couple of months, we're going 217, we're going 294, we're going 339. And I believe we're talking about something like 21 out of 22 times we have beat the expectation in the jobs market, as the market just keeps putting up numbers ahead of what the market expected. Yes, and we get revisions of 93,000. So you add on top of a 200, expectation was 200. We come in at 339. We also beat by 93. So what's that mean? That means we're beaten by about 230,000 jobs, right? Overall. Amazing. Business services, healthcare, construction, and transportation and warehousing were among the sectors adding jobs. Low employment has put pressures on wages. Wages year over year, 4.3%. Month over month, I believe that number was 0.3%. You annualize it, you're still talking about 3.6% wage growth, under where we are on inflationary factors. But nonetheless, yeah, as they say, the Fed is watching it closely. I would imagine so. But boy, I don't think they would have been that strong with the language if they were going into a quiet period, knowing you were going to get this type of data. They would have left themselves the room. They wanted to forecast what was happening, folks. And I don't know how you do it, but they forecasted it. So I would have paid attention. The market paid attention to it yesterday. And right now, I think what's going on in this market is that it is no longer worried about the Fed when you're getting that type of strong language. Worries may creep back up if things change in the future, right? So we get a meeting every about 6 weeks or so. Let's say they pause in this meeting in June. I got to pull it up, but I'm talking, the next meeting's probably late July after that. If you get a series of complicated numbers pointing to higher CPIs, PCEs, jobs numbers, yes, you could have a real recalibration of the prices in this market. But right now, the market is no longer seeing good news as bad news in terms of dictating that the Fed is going to have to be more aggressive. The market is now seeing good news as good news, and we got 340,000 jobs added. And we have wage growth, and the market likes it, man. And we're up 26 points. Continuing the acceleration of yesterday. Let's put it back to a 5-minute chart. You see the brief volatility on that number at 830, and we are pushing basically the highs of that number in terms of that spike to 42.57. S&P is up 26 points right now. You get the NASDAQ 100 up about 64 points, 14,537. Yes, 537. We jump over to the Dow, up about 0.7%. 33,332. Almost got 5 threes in a row there. The Russell leading the way, up 1.4%. Check it out, man. Russell up by 24 points right now. You jump over to Bitcoin. Bitcoin up $235. That's 0.8%. Crude catching a bid from the lows of yesterday, right? Quite an acceleration yesterday, extending those gains yet again today. Crude up $1.58 at 71.70 right now. Excuse me. We jump over to gold. Of course, we're going to have some action in yields, action in the dollar, action in commodities. Gold contract down about $4. You got to jump over to the dollar anytime you're looking at the commodities. Interesting action in the dollar. As you spike to 103.75, and we give it almost all back to where we were at about 8:30 this morning. 103.57 in the dollar index. You jump over to yields. The 10-year. We got a little bit of higher yield in the market, lower price. The 10-year off by 10 ticks at 114.14. So it's interesting, right? The market sees this number. Yields go up. We got a hot economy. We got a Fed that's potentially going to pause, but even the market realizes we got a hot economy. We're adding 340,000 jobs. Yields, growth rates, yields going up. This will put pressure on the Fed eventually, folks, even if it's not this meeting. But it would be a shocker at this point if the Fed decided to hike yet again after the strong wording you heard from the vice chair nominee himself. Powell, the last words he put out, etc., really gave the room for it. There hasn't been any correction of that language so far. We're now through the non-farm payroll number, and yeah, we got 340,000 jobs, but they knew there was a possibility that we were going to have this number, right? Nothing staggering. I mean, if we had 600,000 jobs, if we had 700, right? If we had 700 and we get some type of wacky wage growth, of course they can change their course. I don't think this number does it, man. I think the market, is in positive territory, and I don't think it gets freaked out because writing was on the wall, man. We found out we are getting a pause or a skip, and I would take them at their word that it is a one-meeting decision right now, okay? They're willing to give it, and let's pull up as we do. Let me find out real quick here where that next Fed meeting is, because they're going to give themselves one meeting. And then it's going to be data dependent on the meeting after that, I believe. Let's see. 2023, probably talking about late July. We're talking about July 25th and 26th. So, and the next one after that is September 19th and 20th. What do we got? Let's see. We got one meeting June 13th and 14th. So we have 5 more meetings throughout the year. 5 meetings throughout the year. We're going to probably get a skip or a pause June 13th and 14th. We still got some CPI numbers, so there could be a shocker there. But pretty remarkable, the resilience of this economy, that this is the point in time that the Fed is going to take to pause. Seems like they're airing a lot of risk with inflation, not quite under control yet, and they are going to calm how they are hiking rates. Maybe the stress in the banking sector is a little bit deeper than some of us realize, if that's going to be the case, because it just doesn't seem like that should be the course of action. We jump over to a couple different equities. How about Amazon? They're going to trade up more than $2. They're up almost 2% right now. Amazon shares, they might be going into wireless, man. It would make sense, right? The headline, why not? Let's jump over to it because it's quite a headline when you talk about the implications of how it will go. Amazon's in talks to offer free mobile service to Prime members. Yeah. Loyalty perk could include $10, possibly free unlimited plans. The deal could boost wireless wholesale revenue for carriers. In talks with wireless carriers about offering a low-cost, free nationwide mobile phone service to Prime subscribers. Lock it in, baby. Market's higher. Stay tuned, folks. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P up 24 points right now. NASDAQ up by 58. You jump over to Amazon. Yeah, so we're pushing 125 right now. You jump over, and let's jump to the phone companies first because the implication's pretty stark, man. There's your AT&T jump off from $16 to $15, $15.80 to $15.04, just like that. You jump over to Verizon shares from 36 to 34. You jump over to T-Mobile from 138 to 130, just like that. Now, it's interesting that they're negotiating with Verizon, T-Mobile, Dish also taking it on the chin there. They're actually higher. Okay. So it looks like they may actually benefit to get the lowest possible wholesale price, right? It's going to let Amazon offer Prime members wireless plans for $10 a month or even possibly free and bolster loyalty among the biggest spending customers. They've been going on for almost 2 months, these talks. Think about that. So you are progressing, to put it lightly, have also included AT&T. So what do you got? You got Verizon, AT&T, T-Mobile, and Dish all in communication as Amazon. And, you know, one of the things that is remarkable is how much we pay for cell phone service sometimes, because there are some phenomenal plans out there. What was it, right? Ryan Reynolds, didn't he have Mint Mobile? He sold that to T-Mobile, I think, for a while. So it's probably something like I have an iPhone and I'm on T-Mobile and it's a huge luxury and I do a lot of work on it and I trade on it as well and do all this stuff, etc. So it's worth it for me what I pay. But for people are vastly overpaying, really, when you think about the amount of money they spend on the phone, the frequency they spend that money on the phone. Then you think about what happens in terms of now I'm paying Apple, I think, $10 a month because I have so much cloud space that I'm using, mostly through photos. There's $120 a year I'm paying. Most people, you could get a $10 plan for your phone. Point being, there's a lot of extra money that people are spending that you probably wouldn't need to get by with a lot of great services on your phone, just not quite to the premium level that we're used to, especially when you talk about iPhone and that whole ecosystem. Amazon's competing with Walmart. They have Walmart Plus emerging as a low-cost alternative. Many of the same perks as Amazon, right? Amazon in February, talking about grocery, just talking about the competition level. And yeah, for wireless industry, Amazon deal could be seen as a welcome boost to the wholesale revenue and a way to attract traffic to the newly expanded 5G. And yeah, I'd be real careful if I was these carriers, man, because what is the point of being the carrier? I mean, for some context here. Right? Let's see what some of these companies are valued at, man. Like T-Mobile. We jump over to the Analyze tab on the Thinkorswim platform. We go down to the fundamentals. T-Mobile's valued at $150 billion. Okay? Amazon shares right now are valued at $1.28 trillion. We jump over to Verizon shares. Verizon's valued, excuse me, $142. You jump over to Dish. $3.6 billion. And what was the last one? AT&T. $100 billion. Point being, if Amazon really got into this business, they could take them out in a heartbeat, man, if it was really worth it. And I imagine you'd wait for those values to drive dramatically lower from where they're at right now. With Prime members, Amazon would become a new national brand, reselling mobile service from one of the big three carriers, and the retailer could choose to offer wireless to its Prime members at an attractive price. I mean, what happens here is we have a great deal that's Spectrum. And I don't know who Spectrum goes through, but there is a great deal, man. Spectrum, if you're in this area, folks, Tampa, Spectrum TV, you get the Spectrum home package, you get TV, you get mobile. If you add, you get internet. If you add mobile to that, it is a really affordable price, especially compared with some of the other networks there. Now, you also get linked into their whole network of cable TV. Maybe it's just internet. I'm not sure what you have to sign up for, but they do have a good service, and you're seeing more of that type of stuff play out. What's interesting is once you bundle it, it's very hard to get out, right? Because if you want to change your TV provider, you'd have to change your phone provider. And think about that. If you want to cancel your Prime, you'd have to change your phone provider. Amazon's aware of that one for sure. I can tell you that. Look at that, right? So they've made several forays into wireless. In 2014, they had the Fire Phone. And they're going to start testing a satellite internet service as well. Dish is already working with Amazon, the AWS division, and providing cloud computing to run the core network for its wireless service. So they already have a relationship there. Yeah, and they're just going to go to the reseller wholesale network, so they have to avoid having their own network. And maybe if they do well enough there, they eventually come in and just buy one of those carriers in their network. Why not? But be careful on these equities, man. The whole world is changing. I mean, Verizon. Boy, you take a look at these Verizon shares, folks. You're going to open at $34. I got a call. I forget who it was. Maybe it was our man Tom from Tampa recently. And my mom worked for Verizon, folks. Great company. But there is something really wrong with this chart. Really wrong. You are going to open at $34. Okay? You're going to open below last year's low. When's the last time you saw $34 in Verizon? 2011. Yeah, that's a dire one for these phone companies, man. I mean, look at this. You're going to open at $34. When's the next stop? This is probably going to $26, $27, man. Verizon, you were at 60 in the beginning of 2021. Let's check out. And oh man, AT&T is going to open below 15. Look at this. AT&T hasn't been. I mean, AT&T is going back to prices in 1997. 1997. Be careful. The world is changing, and maybe these companies are going out of business, man. T-Mobile's in its own class, but maybe even they are going to peak out, as you're going to get quite a gap to the 130 area. For T-Mobile, you were just trading at 154. And boy, they did incredible things, T-Mobile, right? They kind of changed the industry at the first, right? Which is why their chart is a little bit different. Yeah, and be careful for those dividend stocks, man. No such thing as safe when you're talking about it, especially when you're in an area like this. And maybe this is the writing on the wall, because you look at the stalwarts, AT&T, and you look at Verizon, man. dire charts, to put it lightly, going back 10, 15, even what? What did I just say for AT&T, man? Let's zoom it in. You're going to open it under 15. What'd you get to? You got to 14.24 in 2003, and back it up beyond that, you're talking about 1997. Yeah. I mean, if Amazon gets in the business and they have what, think about it. They got 160, the number's up here, 65 million Prime subscribers, something like that. Let's see, 167 Amazon shoppers had a Prime subscription as of March. I mean, think about that. Amazing. Unchanged from a year earlier, but basically everybody in the country, man. And if you get them on phone, you basically got everybody in the country, which is a staggering thought, to put it lightly. Okay, let's jump around. Enough on Amazon, but quite a story. As you could change things, let's see what else we got going on. We talked about the jobs, of course. What else we got? Yeah, we'll talk a little bit of tech coming up. Well, we're coming into break. Let's tease this one that we'll talk about a little bit. You talk about paying up for traders, but boy, it makes sense when you talk about it. Hedge funds at a war for top traders. How about $120 million and a year off paid? We'll talk about this when we get back, folks. Stay tuned. It's going to be an interesting open. It's Jobs Friday. Markets coming in higher territory with the S&P. 4254. Do we see 4,300 today? We'll find out. Stay tuned for the open. We'll be right back, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
58. You're talking about above where we were last August, and you're talking about pushing the highs of 43.27 in the middle of last August, I guess, same month. 43.27. Hadn't been there in about 10 months as we're above all the recent highs, man. 42.60. We're climbing higher. NASDAQ 100 up 103 right now. You get the Dow up 250. And how about the Russell? Up 1.7%. A little bit of a different story with the Russell, right? I was just talking about the S&P. We're just right near that August high. The Russell high still 203 points. 230 points. Yeah, 12% almost from where we are. A lot of the regional banks, I'm sure, putting a hurting on the Russell, among some others, considering they don't have the weighting of the NASDAQ 100, which again is up another 0.7% right now. And boy, where do we have to back things up for the NASDAQ 100? You are back to levels that we have not seen in the NASDAQ 100 since last April. Remarkable. 14,581. Let's check out some of the stocks with action today. We talked about Amazon continuing the lift. Yeah, I would say so, man. Up 2.5%. Amazon finally catching a lift after being faded for so long. You take a little bit of a longer-term look on Amazon shares. We're pushing highs of about 188. And let's just see on a Fibonacci basis where we are on that pullback. Now rising above the 382. If you're looking for the 50%, 135. The 618 all the way up to 147 on Amazon shares as this market fades higher to a strong jobs number. And let's jump back to that jobs number before we get to how much the traders are making. There's our trader article. Oh, there's our Amazon article, excuse me, and we will pull over the jobs numbers. That's going to be the live feed, and then I'm going to pull it up on the journal as well. So 339,000. The unemployment rate edges up to 3.7%. I believe you have 62% people in the workforce. And when you jump over to the number, though, what I would pay attention to, folks, is that there's no slowdown here whatsoever. You know, wage growth, I think it was 4.3% year over year, month over month, 0.3%. Strong numbers. The Fed has made up their mind that they look to pause or skip on the meeting June 13th and 14th. We get that meeting 2 weeks from this past Wednesday. And then the next one is late July. And I imagine they're going to let things play out. But boy, it's a kind of hot number, man. And if we get these types of numbers up until the next meeting, it's going to be especially interesting what they do in July. They're going to give it one more July and then fast forward from there. And after that, we're talking about September 19th and 20th. Maybe they take the summer off. Depends on the data. Just surprised they didn't allow themselves to be dependent on the data for the first time in a while, right? Those words, pretty stark, that came out earlier this week from some Fed speak, especially Jefferson, who's the vice chair nominee, made things as clear as possible. And I don't think you'd have the vice chair nominee coming out being as clear as he was if there was any doubt in the chairman's mind of what they were going to do. And it would have been easy, folks, okay? You could have come into this number and said, we're looking for 200,000 on the jobs number. You know, if we run hot on the jobs number and we run hot on the CPI, that may tilt us in the direction of more hikes. No, they didn't do anything like that. They're well aware the data was coming, and they left themselves no room. So I think the writing's on the wall, even though the market's probably given it some percentage still that they are going up. I would not think that that is about to happen, to put it lightly. Yeah. All right, what else we got pulled up? Let's talk a little bit of money. In the world of hedge funds, man, it seems like 50 to 100 million is not that much when you're talking about companies that are managing tens of billions of dollars. Now, what they're talking about here, and some of the numbers are worth it, okay? David Lipner, he was going to quit billionaire Izzy Englander's Millennium Management to join a rival. Well, what did they do? A one-year paid sabbatical and incentive upon return, $58 billion industry giant, right? Doesn't seem like a lot of money when you talk about that. He had made money for the firm for a decade, and yeah, it makes sense, because what do these people do? I mean, there's so much incentive to leave and start your own hedge fund, right? If you're worth this much money and you're managing a fund for a decade for one of these big players, that's usually what happens. And so to stop that from happening, it's pretty much an obscene amount of money. Now, I find myself big picture, and it's interesting how this happens, right? Because I think CEO pay is out of whack, especially when you compare it to average income, worker pay, etc. because these are public companies. That money comes from somewhere. There's no incentive to control executive pay because the executives are the ones that are making the pay. I mean, think about it, right? People on the board are usually executives in the same arena. Why would they ever want to limit themselves back to the times when CEOs were making hundreds of times the average income for their employees? Not. But it is interesting in my own mind because that one is a little tougher to rationalize, okay? But this is like so easy to rationalize in my mind, which is interesting because they're kind of similar. And that's the argument that gets made, you know? When Elon Musk gets his pay package as a CEO, not talking about his owner, okay? It's because that company thinks he is that value to provide that value to that company. And boy, for Tesla, man, he took a lot of heat for that company and the pay he took, but the multiples it has delivered over time since that pay package was put in place, astounding, to put it lightly. JP Morgan, Jamie Dimon, right? There's many that come up. It's so easy to rationalize why you would pay a trader like this because $100 million seems like nothing when they have that much at stake, and that is what happens with CEOs. So I don't know how you pair that one. But it is interesting. I found my own head understanding instantly how you would pay a trader because it's just simple math. But that is the argument on the CEO Accord as well. Not sure how you pair that one, but it is kind of out of whack when you have CEOs making the pay that they're making these days because the companies are just so large that it's worth it to have the right person. All right, look at this market, man. Yeah, are we going to see 4,300 in the S&Ps, folks? It's possible. Quite the acceleration. The market is now excited that we have a hot jobs market, a strong economy, and it doesn't care that we have inflation going on because the Fed has indicated they're going to pause. I mean, wrap your brain around that one, man. Can someone help me out on that one, how that one ends? Because I don't think that's how it goes. We need to see some change in these numbers for the Fed pause to matter because we are at 4 to 5% inflation. So the market loves it. Who wouldn't love the Fed pausing when we got inflation cooking and we got jobs at 340,000? But here we are, folks. So, doesn't have to make sense if that's where we are. This market relentless to the upside with the S&P up 40 points, NASDAQ up 136. Amazon up 2.3%. Let's check on the AI poster boy NVIDIA. $400 up another 0.6% right there. AMD shares up 1.3%. Let's see how those phone companies. Yeah, AT&T right at about 15. T-Mobile down 7%, and Verizon down another 3.4%. And be careful, as I mentioned at the top of the show, on those ones. All right, let's see how we got dollar as we come into this break. Dollar index right now, basically flat, 103.54. We jump over to the 10-year. Got a little bit of higher yield on a hot economy, man. 10-year off by 11 ticks at 114.12. And yeah, pretty remarkable. S&P is at 42.70, man, at a time when, imagine, the market is competing with a risk-free rate of return of about 5% right now, and still everybody is buying stocks. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's up by 1.05%. That's 44 points to the upside, 42.72. We could see 4,300 today, man. Don't expect anything to get in front of this market right now, folks. Market loves hot numbers when you don't have to worry about a Fed hike. And we're seeing a new territory. That hasn't happened in a long time, man. And I think the writing's on the wall, and you're seeing it play out yesterday and today. We get the NASDAQ up 151. That's more than 1%. The Dow up 1.1%. The Russell up by 1.6%. Now, I talked about the risk-free rate of return as we ended that last segment. So a lot of attention, rightfully so, okay, gets paid to what we're talking about for yields on treasuries. The 10-year treasury right now is at 3.63%, okay? 3.63% from where we stand right now, jumping over to the 10-year. We're dealing with 3.63%. Now, I'm going to jump to the curve for a moment, just to illustrate where we are in treasuries, okay? So treasuries, you jump to the 5-year, we're at 3.75. The 2 years at 4.4. Don't get lost in these numbers, though, folks, because the risk-free rate of return is much closer to 5%, okay? Short-term ladders right now, today, 5.3% is what you can get going out to about a year. Okay, you go out to 18 months, you're getting 5.2%. Guaranteed FDIC insured banks certificate of deposit, a CD. The numbers that you go out to for a 1 year gets you 5.3%, which is what I just told you. A 2 year, now these are non-callable. They're protected, okay? They're guaranteed. Some CDs, the bank has a right to call them back. Those are a little more risky. You could almost call them a variable CD because the bank would probably call them back if rates deviated too much. But if you want the non-callable ones, so you're locking in that CD rate for the life of that certificate of deposit, giving that bank that money for that period of time as a result of that reward payment that you're getting back. You go out to 18 months, you're at 5.2%. You go out to 2 years, you're at about 4.9%, okay? 4.9% for a 2-year CD right now. Now, if you ladder, let's say you want to do a 5-year ladder, and what a ladder is, folks, is that you go out and you just basically proportion that money out over the period of the 5 years. So a 5-year ladder, let's say you buy a CD for a 1 year, 2 year, 3 year, 4 year, and a 5-year CD. So every year your CD expires, you take that money, you put it back into a 5-year CD, and you're just continually rolling that, getting money back every year that you can choose to either re-roll into that. A 5-year ladder right now, if you average out what your entire yield is over those 5 years from your 1 year, 2 year, 3 year, 4 year, and 5 year, 4.77% right now, okay? 4.77% guaranteed for 5 years. Now, what you should be doing in your head, okay, is that we are trading right now at, I had 42.71 is the number I used when I started this calculation, okay? And I'll pull it over here. It's a real simple calculation. Our guaranteed risk-free rate of return is 1.0477 or 4.77%, okay? So in 1 year, and this is just taking the number that you're getting over 5 years, you're getting 5.3% if you're talking about 1 year from right now, okay? But when you go out over 5 years, after 1 year, you're getting a risk-free rate of return with the S&P essentially sitting at 44.74 because that's what your money's worth in the CD. That is the 4.77% return that's risk-free. You better be looking for bigger prices in the S&P over the next year than 4,400 to 4,500. Otherwise, why are you taking risk when you got a risk-free rate of return just sitting out there for a CD? You go out 2 years, you better be looking for about 4,700. Now, again, this is using the 4.77%. You're actually getting close to about 5.17% if you do a 2-year ladder. But if you go out 5 years, okay, the number that puts the S&P at is 5391. So you're talking about an S&P that needs to rise to about 5,400. It's 5 years, folks. The S&P could be at 8,500, okay? It's possible. That should be the reason why, not maybe 8,500, but to illustrate the number. So put this in context, right? If over 5 years, the S&P comes in at 5,500 or 5,600, well, did you benefit? Yeah, you benefited because you made more than you would have at 4.77%. But if you think about the risk you take over a 5-year period versus the risk-free rate of return, which puts your money right now from 42.62 to 53.91 over a 5-year period, and guess what? Best part about it is in 5 years, you got that number and you don't have to risk anything. It's important to remember right now, and those numbers are going to stay high. So it's astounding the market is being as relentless as it is when we have inflation raging, but the Fed is now going to pause. The market is still hot, and numbers have come in pretty well, all things considered, especially the big tech companies. But keep your eye on this one, and even for your own personal perspective, man, because if you're in retirement and you're not willing to take, I mean, folks, 10% in this market is easy, okay? That's like nothing. We were just at a 10% pullback less than 3 months ago, okay? And we still have inflation raging, and you could have another Fed bout where they really have to bring it again with inflation. That's the scary part, tail risk of this. So even if there's a 5% chance things go array in the market, are you willing to take that? Do you have enough time horizon? If you're near retirement, man, these risk-free rate of returns, or you're in retirement, I'd really pay attention to them because we so often we're quoting treasuries. But if you look at the risk-free rate of returns right now, okay, you're talking about if you go out a 5-year CD, non-callable by a bank, 4.45% right now. That's a 5-year. That's not talking about the ladder. If you ladder it up over 1, 2, 3, 4, 5, you're talking about 4.77%. It's an amazing risk-free rate of return, and you should be comparing it to where we are in stock prices because it's a guaranteed rate, and the market is sitting pretty well off some of the lows, and we have risks in the future, okay? Doesn't mean they're going to play out, and as I mentioned, doesn't mean that AI isn't going to take over, and this could be a productivity boom, the likes we've never seen, that accelerates values in technology and other equities. It could happen, and it is going to be a productivity boom, folks. If you're not using ChatGPT, check it out, man, because you want to become accustomed to it, because it is the forefront technology. It's going to change things. You want to have an understanding of it. And the reason why it's going to change things is because of the productivity that is going to allow, period. I mean, you hear the things about coding, right? Can you imagine being a coder right now? The things that you're probably going to be able to do in terms of just providing the chatbot with the correct commands, and it will write you out code that could take a year in the span of a day, or something like that. That is going to be a game changer, and you at least want to understand it. And that could be a boom on these tech companies. But guess what? We're dealing with inflation. What about war? We got war going on. Nobody even talks about the war we have going on still with Russia, right? We got crude prices at $70. What happened if that starts to elevate again? There are risks out there. And I really felt the need to talk about those risk-free rate of returns, man, because you put it into a market. So if you're in the stock market, right, you better be looking for a price tag of 5,500 plus over the next 5 years in the S&P if you're in that market. If you're not, go buy a CD because you can get the same price in the S&P and you don't have to risk a penny. That's some valuable advice. Probably the best advice I can give you all day, folks, because guess what? That's not an opinion, it's fact. Everything else is opinions. S&Ps backing off barely from the highs, still up 37 points. One more segment, folks. Stay tuned. We'll be coming back. Don't go away.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now up 36 points, 42.64, slight pullback but all things considered, right? We're pushing prices we haven't seen in a very long time in these markets. You jump over to some of the equities we talked about. Amazon pairs some of those gains up by 1.7%, though. You jump over to NVIDIA, pairing some of the gains as well, drops off $12, negative by 1% right now. AMD shares lower by 0.7%. It's been trading obviously with NVIDIA shares. You jump over to some of the companies hurt by Amazon, a little bit of a lift. AT&T still down 4% over there. Verizon shares a little bit of a lift as well. Looks like the market doesn't think phone carriers are going out of business just yet. But as I mentioned, pulled up those charts. If you didn't see it, folks, be careful of those phone carriers. The charts might not be their friends, and T-Mobile, the best of them all, but you're off by 7% today in terms of the best overall chart, rising. But maybe that was a peak moment for T-Mobile as they come out of conquering becoming one of the biggest carriers out there from being on the sidelines for so long. Let's see how some of the banks are trading right now. Yeah, catching a lift, man. JP Morgan up by 2%. Bank of America, 2.5% right now. Citi, up by 2%. Wells Fargo, up by 1.3%. The airlines, up by 2%. American. Delta, up by 1.1%. Jump over to the streamers. Netflix, off a bit. Meta shares, basically flat. Disney catches a lift, finally up 1.8% with the market. Dow up 411 now. Some of those banks, right, really driving the Dow. 33,515. Exxon up 1.6. Everything higher. Be careful this market, man. Don't see it finding a sell today. And you don't usually hear that from me, recently at least. Maybe that's the day you go lower, right? You get all that optimism. We'll see, though. The market exuberant over the fact that, yeah, we're probably getting a pause, we're probably getting a skip, and with that, we got some pretty hot economics that are coming down, and we'll figure out how to squash inflation at a later time, I guess, for now. Folks, thanks so much for starting your Friday with me. Stay tuned. We got our man Basil Chapman coming up next, and don't forget, folks, next Thursday, while you're waiting for Basil, okay, head on over to the front page of TFNN. We have Tim Ord, market guru, expert trader, market timer of the year. Going back, S&P and gold. That's next Thursday. The S&P, gold's a week after that. Check it out on the front page, TFNN, folks. Have a great weekend. Stay tuned for Basil. He's up next.